Hey, everybody. Thanks for joining us today. I am really excited about today's guest. Today, we are speaking with a real estate investor and mentor who has more than 5 decades of experience and has been involved in over 10,000 residential and commercial units and knows exactly what creates wealth across every market cycle. So, Joseph Bodek is a seasoned real estate investor and mentor. And through Real Estate Mentoring USA, he is helping aspiring real estate investors learn creative strategies, lead generation systems, and transaction structuring techniques designed to build long term wealth. Over the course of his career, he and his family have been involved in the development, construction, ownership, and management of homes, shopping centers, and apartment units across multiple states. And he really specializes in creative financing strategies. Those are like wholesaling, lease options, subject to deals, and of course, everyone's favorite fix and flip investing. Since 2010, he has mentored thousands of real estate investors through hands on coaching and training programs. And he's helping students generate profitable deals and scale their investing businesses. So, Joe, welcome to the show. So glad to have you with us today. Thanks so much for taking the time to come in and talk to us. Tell us a little bit about how all of this got started for you. I'm always curious about the background story. So, how did you get here?
Okay. All righty. Well, first of all, thanks for having me, Krista. I appreciate it. And let's see, how did I start in this business? Well, I'm not the typical story that most people hear. I wasn't up at 2 o'clock in the morning watching the infomercials and saw the wonderful real estate commercials, and then bought the program. And as they say, the rest is history. I'm unusual in that I was born into real estate. By the time I came along, my dad was one of the, if not one of the largest builders of single family homes in the country. If any of you out there live in a split level or know what a split level is, my dad's the guy that made him famous, but we built thousands of them. So you can say thank you to Ralph if you're living in one of those split levels. At any rate, I went to work for my dad after college, and I learned traditional real estate, basically how to develop land, how to build houses, how to do regular financing through banks, all that kind of good stuff, and did that for about 25 years. And my dad decided to retire. He sold off pretty much all of the properties. We had 7 apartment complexes. We had a bunch of houses that we hadn't sold yet. So everything got sold. And I went out on my own, did a few different things other than real estate for a little while just to kind of test the waters out there. And it was lucky that I did because, as all of you out there probably know or should know, real estate really is marketing. It's really not real estate, it's really marketing. And I was lucky enough to work in the insurance business for a little while with some extremely, extremely smart people, which is where I learned how to do my marketing. I didn't learn it in real estate, I learned it in the insurance business, believe it or not. And at any rate, eventually I decided I wanted to get back into real estate, and I went into creative real estate, as Krista mentioned, lease options and fix and flip and all those good things. And I specialized in lease options for a lot of reasons, but that's where my specialty was. And so I did that for about 30 years, doing deals, mostly lease option deals. I've done some subject to and some fix and flip, but very little bit. I really like uh, uh, lease options. And at any rate, I was getting ready to retire, and people kept asking me, how do you do this and how you do that and how you do this and how you do that? And I'm answering them. I'm like their daddy. I'm telling them all how to do this stuff. And the next thing I knew, I had a mentoring program going on. And so I formed a little company. To date, I've mentored about 2,000, a little more than 2,000 students, mostly in lease options, but also in wholesaling and lead generation programs. And so that's where I am now. I'm still mentoring, not as hot and heavy as I was before because I'm thinking about retiring again. But at any rate, that's how I got to where I am now.
Oh, wow. That is an incredible story. I'm not even sure how many split level houses I've lived in, but that is so amazing that your dad is the OG of split levels. So that's fantastic. As you're talking, I'm really thinking about everyone who's with us and potentially listening and thinking like, man, real estate sounds like such a great idea. But I don't know a lot about finding capital or how can I get started. And so, what I love about everything you just mentioned is that it doesn't require a huge amount of cash reserves. So, talk to me about why you went that route instead of, what some people would call a more traditional route, which is like private lenders and hard money. And why wholesaling and lease options and subject tos?
Well, one of the big reasons why I went into creative real estate was because, I'd gone to banks and borrowed 10 million and $15 million to build houses and all that kind of stuff. And that was wonderful. I mean, I wasn't like my father. My father, he would go borrow 50 million and go do a deal, and you never knew that he even borrowed the money. It just didn't bother him. It bothered me, even though everything went fine and I made my money and the house that got sold and all that stuff. But it just bothered me to be in hot to a bank for 15, $20 million. So at any rate, what happened was back in the late 70s, early 80s, if you remember, the S&Ls went a little crazy, and they started calling all their loans in. And I know a lot of people in this business, and I started seeing multimillionaires going broke overnight, literally going from multimillionaires to broke and having to go into bankruptcy. And I didn't like that at all. And that really convinced me to stay away from banks, which I do. So when you're doing creative real estate, the beauty of it is you don't need any cash or credit. You don't have to worry about that. So that's the big reason why I originally got involved is because I just didn't want to deal with banks. I didn't want to deal with money lenders. Not that I'm telling anybody that's a bad thing to do. If you don't mind doing it, it's wonderful. But me, my personality was such that I just did not want that held over my head from anybody. And when you're doing creative real estate, you don't have that problem. You don't ever have to go to a bank. You don't have to worry about your credit, and you don't have to worry about putting all kinds of down money down on these houses. So that's why I did it that way.
Interesting. Okay. So I imagine you're talking to a lot of sellers. You are really in the business, as I see it, of helping people because it feels to me like when you're working with these types of strategies that you're going in and helping homeowners who like probably aren't in the best situation. There's something happening
Mhm.
in their life that's really making them open to want to do something creative to figure out how to exit out of the situation they're in. So what's kind of happening in the market that you think is really driving that? And then my second part of that question is like, how do you really get someone to want to release their property to you? Because some people might be like, "Ooh, I've never heard of this before. This I'm not sure about this," as a seller versus a traditional sale.
Well, as far as your first question about the market has something to do with it, but creative real estate, we're not realtors. I'll put it to you that way. I was a realtor in another life, but
So you're a
we're not
recovering
realtors.
realtor.
I'm a recovering realtor. I like realtors. Realtors out there, I like
I
you. I
do
like you. I
too.
like you.
I do too. They're
I
worth their
was
weight in
one.
gold.
Yeah, I was one. But at any rate, yes, you have swings in the markets. That's usually could be a part of the problem. What we do in creative real estate is we come to the rescue. In other words, sellers want what they want till they find out they can't get it. Okay. And what I mean by that is that, everybody wants cash for their house and everybody thinks their house is the Taj Mahal and, they want too much money and, we all go through that kind of stuff. But what happens is that when they can't get a property sold conventionally through a realtor or either they're selling it themselves, that's when we come into play. For example, you have people that will go out and buy a new house and they haven't sold the old one. For whatever reason, they have a problem getting rid of that old house. Now, they got two mortgages. It's killing them. They got to get out from under this problem. And what creative real estate really does is it gets them out from under their problem. It gives them debt relief. So when you ask me why will people give up equity in their property and give you their property in a non-conventional way to work with, it's because they got a problem that needs to be cured, and realtors can't do it, and they don't know how to do it, the owners, but we do. So we'll come in and we'll do a creative financing deal. Anytime you make the owner the bank, that's creative financing. Okay, anytime, meaning that they're going to hold the mortgage, but you're going to work with the house. Okay, that type of thing. So anytime that you do that, that's creative financing. Okay, so lease option, subject to, fix and flip, all of those are really pretty much creative financing. Okay. And so what we do, as I say, is we come to the rescue when they can't get rid of their property conventionally. That's when we come into play. And the beauty of it is now in wholesaling, of course, you're always trying to drive the price down to get as cheap as you actually can. One of the reasons I like lease options, for example, is I can give a homeowner pretty much what he wants. And the way lease options work, I can still make a pretty good penny in the deal, and the owner doesn't have to worry about me coming after him for 50 cents on the dollar. I can give him pretty close to what he's actually asking. So that's what we can do for people when we come to the rescue.
So, can you break down for me an example of a lease option that you've done in the last year, just in case anybody listening says, "Hey, lease options sound great. I want to know more about that." Tell us how that works.
Well, I can give you, let me give you a basic example using some simple numbers. That'll make it easy, okay? Is that all right if I do it that way? Let,
Absolutely.
let, let, let's just say that you've got a property and it's worth 100,000. It comps for $100,000. Okay, or excuse me, it comps for 120, $130,000. Okay, the person can't get this place sold for whatever reason. So we'll come in, we'll do our comps, and what we can do is we put it under a lease option contract for X number of years, usually 2, 3 years. Put it under. Now, there's two types of lease options. I'll tell you about that in a minute. I'm going to tell you about a what's called a sandwich lease option in this example. So we'll come in and we see that it comps out at around 120,000 for argument's sake, and we'll get with the seller, and let's say we can give them 100,000, and usually that works out, or maybe 110,000. That's pretty close to what they were asking. Okay, so what we do is we will give them a couple $100 up front. Okay, earnest money. You don't have to give them $20,000 down like you do with a realtor. Give them a couple $100 or $100. That makes the deal legal because money has exchanged hands. And now what we'll do is we'll go out and we'll find a tenant buyer. We do our due diligence on that tenant buyer. These are people, they're good people. They've run into a problem. Most of the time I found it was medical bills, either that or credit cards that got them into trouble. But medical bills most of the time. And they've got to get their credit back up so that they can go ahead and buy a house. They make good money, but their credit isn't good, or they don't have enough to go to a bank with a down payment. So they've got to get more down payment. It's one or the other. At any rate, we'll put them in there, and what happens is there's 3 paydays in a sandwich lease option. The first payday is called the option consideration. That's what the tenant buyer gives to me as a consideration to purchase the house, to exercise his option. And that runs anywhere from 10, 20, 30, $40,000. It depends on, what the house is worth, what you're going to get up front. That's a um, uh, non-refundable payment. Okay. The only way they could get that back is if you can't deliver the house for some reason. Okay. So now you've got that in your pocket. Now you have a second payday, which is the rent spread. Let us suppose that the rent or the mortgage payment for the seller was $1,000. So I can go out and let's say charge $1,500 for the rent to the tenant buyer. That $500 goes into my pocket every month. So you're creating residual income out of this property. Now, the third uh, payday is what's called the back end. Let's say that the deal is now I'm going to sell the property. I'm picking it up for 100,000 from the seller, and I'm going to sell it to the tenant buyer for 120. And I took 10,000 up front as the option consideration, which I just mentioned to you. Okay, there's still $10,000 in the deal, right? Because there was a $20,000 spread. So at the end of the deal, in other words, a year or 2 years or however long it takes for this guy to say, okay, I'm ready to go buy it, all right, and you go to settlement on the house, that's when you get that other 10,000. Okay, so there's three paydays, but in a sandwich lease option, what I like about it so much is the residual income from the rent spread because I don't own this house. See, what most people do is they go to the bank, they borrow all the money, they get in all kinds of debt, they fix up the house, and they make a little money every month. Okay. Well, that's fine. I don't go to the bank. Okay. And I don't make a little bit of money every month. I make a lot of money every month. Okay. But I don't own the house, which I like. Okay. Um, so I control it rather than owning it. And that's pretty much um, what do you call it, what lease options are all about. You're not going to own the property, you're going to control it. And when you got 30, I think my high was like 40 houses at one time I had going on, and you're making $600 a shot. It's pretty good money, okay? And you don't own the house, you didn't go to the bank, you're not in any debt, the bank can't come after you. And if anything went bad or happened that wasn't good, you can always go back to the seller and renegotiate. They always would renegotiate if there's some sort of problem that gets created, okay? So that's how those deals work. Now, there's another form of lease option called a wholesale lease option. And that works very much like a wholesale deal. Okay. You get the property under a lease option contract. You go find a cash buyer or a tenant buyer, and then you flip the contract to them and you're out of the deal. So there's only one payday there. And you do those when you don't have good spreads so that you would want to do a sandwich. And
Amazing.
that's how they work.
I love that. So you're literally, I love what you're doing. You're making money out of thin air, but you're actually helping two people because you're helping a seller who maybe can't make that next payment. And then you're also helping a buyer who, in time, given the opportunity and with some money down, could be in a position to then come in and actually, follow through on the close and
Mhm.
sale of the property and then have it done with a conventional note or something of that manner.
Absolutely.
So I can see why this is such an attractive option that you like to explore. And I imagine you've taught a lot of people how to do this. Have you
Mhm.
have you ever seen an instance, or do you ever find any other investors out there and that maybe aren't as ethical as you are in how they're doing business? And if somebody wanted to say figure out the difference between you and the way you're doing business and someone else and know whether or not that person is actually trustworthy, how would they know?
Well, I think that I can tell you how they probably will know. One of the things that I do and that I teach, I'm full disclosure. Okay, I tell the tenant buyer and I tell the seller exactly what I'm going to do, exactly how it's going to happen, exactly how we're going to go down the road together. And in some instances, okay, I'll even tell them what I'm going to make because I want them to know I'm going to make money here. Do you have a problem with that? If you do, we don't have to do business. Okay. But I am going to make more money on top of, what we're doing here. And so I'm full disclosure. Now, what I've seen out there is guys, and I'm not going to say there's a lot of them, and I don't think that they're being they're thieves. I think they just don't know what they're doing. That's the way I see it. Okay, and you can sort of tell by the way they say things, and they just don't explain to these people properly what's going to happen, what's going on. And that's where you run into trouble because all of a sudden they go, well, what do you mean? You're going to control my house and not. As a matter of fact, I'll give you an example. I have students, and this comes from my students. I have students that call me up and say, Joe, what am I going to do? They think I'm buying the house. What am I going to do? I didn't know what to do now. They're all excited and they think I'm going to buy the house. Because when I get with them, I tell them exactly what I'm not buying your house. I'm going to control your house. Okay, I tell them exactly up front. So they're going, so what am I going to do? Well, it's real simple. Suck it up and go back and tell them that you're not going to be buying the house. Okay. And don't do that again. And that's a lot of what happens. A lot of times, these guys out there don't tell them that they're not the guy buying the house. Things like that. Okay. So I
Yeah.
don't think that they do it to steal or be a thief or something like that. I think they just don't know what they're doing and they don't go about it properly. That's my opinion anyway.
Yeah, I think transparency is undervalued sometimes in the business world. I think what's great about what you're doing is someone's getting exactly what you tell them they're getting. So the seller is getting somebody that's going to come in and control the property and make sure that the mortgage payment gets made. And the buyer is getting someone who's telling them exactly what it is that they're getting in terms of the house and the deal and how that's being structured and what they're going to accomplish and what they're going to be in a position for as long as they move in and do exactly what they've committed to do and making those payments within the couple of years that I assume they're inside this particular contract for. So I think that's pretty amazing. Talk to us a little bit about like the buyer side of things because we've talked a little bit about the seller. But so if you're out there and you're listening and you're thinking, I really want to get into a house, I want to get into a property, but I don't have great credit. Um, how are you, what does that look like? And how are you helping those types of borrowers find a property, for instance,
Oh,
and
to
then get
find
it?
a property?
Yeah.
Well, first of all, there are sites for lease option properties that you can go on. Okay, so there are sites out there. As far as I'm concerned, I get a property under contract and I put it out. I advertise it. Obviously on Marketplace and LinkedIn and Zillow and all the creative sites. And then when they come along, the process is pretty simple. So all you got to do is do that and wait for your phone to ring. Your phone's going to ring off the hook. Trust me. Okay. Now, not everybody wants a house. Not everybody's qualified to have one. Okay. So you have to do your due diligence. And what I do to help these people is I do my due diligence, which is basically I'll have them, like renting an apartment. You got to show your income, you got to show, your checks and all that. You do all of that stuff. Where did you live before? You got to check their credit. And then if I see something that looks okay, I have a mortgage broker and I grab the mortgage broker and say, I think I got one. The mortgage broker will contact them. He'll do a full run on that individual. Okay. He'll call me back and say, yeah, in a year, this guy can clear it up, so forth and so on. Then I put those two together. The mortgage broker, a lot of people send people to these clean your credit places for a lot of money. Well, mortgage brokers can do that for free. Okay. Because if you're going to be their client, they're going to help you clean up your credit. Okay. And then once they get with the mortgage broker, they now have the help to get where they need to go so they can go to the bank and borrow the money and get the house.
Oh, fantastic. I love that. You know, what's interesting too, though, is that if you really pay attention to the news and the headlines, you don't hear them talking about doing things like this. In fact, the real estate landscape sounds kind of scary if you watch the news. So, what do you have to have conversations with potential students about that coming in, the like forget everything you think you know about real estate when you step through my virtual door?
Well, no, I don't think you want to forget what you know about real estate. But what I think you have to do, you got to understand when I came into this business, I had spent 25 years in conventional real estate. The the idea that my first mentor told me, there first of all, he said, "Well, don't you're going to run into these people and they're going to say, take my house." And I thought he was crazy because I'm coming from conventional arena. And then he said to me, and don't worry about it, they're going to give you equity in the house. And I really thought he was crazy because nobody gives away equity. Okay, it just doesn't happen. And it does. That's all I can tell you. It does because they're looking for debt relief. So they don't care about money. Okay, they only care about getting out from under. So what I tell my students is that real estate always works. Always doesn't. It always works. Okay, as long as people need a place to live and have a roof over their head, real estate will never fail. It's us that screw it all up. Okay, it isn't real. It's a building. What can it do? It can't do anything. Okay, so basically, what I tell them to do is not to worry about the markets. You're probably referring to up and down markets, that type of thing. Was that what?
Absolutely. Right. And what the news
Yeah,
media wants to
yeah,
report on, which is it's going way up, it's coming way down. It seems to
yeah.
be always extremes.
Yeah. And I,
Yeah,
and I tell them, look, you don't pay any attention to any of it. Just ignore it all. It doesn't matter. I've been through every market you can be in. Okay. The worse the market is, the more money we in creative real estate make because the more people are in trouble. Okay. Now you have a reverse market. Okay. So when you have a market where, like 2008. Everybody should remember that. Okay, that was when the banks all went, crazy. Um, Made a lot of money. Okay, because a lot of people were in trouble, not through anything that they did. It was the banks that really screwed them. So you have those type of markets, and in those type of markets, it's like, get out of bed and let's do 4 deals. Okay, because that's the way it is. Then you have your market, which is your seller's market, where they're bidding on properties and they're all going crazy. And every student says to me, "Oh my God, we can't do anything now. They're fighting over the houses, and my God, what are we going?" Not true. Okay, why? Because there's always people out there, and lots of them, that get themselves in trouble. Sometimes they do it to themselves, and sometimes the market does it to them. But they're always out there. Okay. And all you have to do for anybody out there that is in marketing is increase your marketing. Talk to more people. This is not brain surgery. He who talks to the most sellers wins. The whole game is that. And if you ask a realtor, they'll tell you the same thing. Okay. If they're not talking to anybody, they're not making any money. So I just tell my students, look, double your marketing. That's in those kind of times. Just double your marketing because there's still the same people out there. It's just you got to get to them. That's
yeah.
all.
We
And so that's how I cure that problem. It's all the look. I could go and make out like I'm some sort of genius and start using fancy words and all that kind of stuff. I'm not. It's a simple business. So a lot of these guys do it so that you think they're really smart. I don't know how smart they are, but they sound smart. Okay. I sound kind of sort of not smart. Okay. Because I don't want my students to think you got to, go to Wharton Business School to do this. You don't. I mean, you just don't. It's not that hard.
Well, we used to say the fortune's in the follow-up, right? So the more that you
Mhm.
follow up, eventually you are going to get to that one person who does need you, that you can actually help. And I like that you're kind of keeping it simple for people because it feels to me like if somebody were to come to you looking for coaching and mentoring, you're going to kind of meet them where they are. It doesn't matter what their background is or how much money they've made or how much education they've had or whatever they've done before. You're going to show them a system where they can actually take steps and begin to see results. And I think that's really amazing, especially for the time we're in right now. I just read a report the other day that the foreclosure rate spiked to 26%. To me,
Mhm.
it seems like now people are starting to really feel the pinch. And so maybe they do have equity in their property, but maybe there is some reason they can't afford it and they're going to need to talk to someone like you and to your students. Now's a good time, it seems, to jump in.
Do you know? I was reading last week, I think it was, or a week before. They did a report. They did a study to find out how old first-time home buyers are these days. Now, when I was a kid, they were 20, 21, 22 years old. They would go buy their first house. What do you think? This is amazing.
It's
The
climbing.
primary age now for a first-time home buyer is 40 years old.
Yeah.
I can't believe it. 40 years old. That's incredible.
Yeah,
I mean,
there's
even if they're off a couple of years, that's still not good. Okay.
well, yeah, and I
Still
think
not.
there's so many things that factor into that too. But one is like I remember the first house I ever purchased, I paid 120,000 for it. And, it wasn't, I mean, I went through FHA as a first-time home buyer, but now you're looking at the median housing cost, it's in the 300,000s and above. Like it makes the entry
Oh,
point, difficult to work with. So it's a lot of money. And I think people are not necessarily we haven't had salaries and, keeping up with that type of
oh.
inflation.
A $200,000 house back then, okay, is now a $450,000 house. I mean, that's
Exactly.
just that's the way it is, and that's why it's taking so long for them to qualify for a home. That's why I got to be almost 40 years old to be a first-time home buyer. That's just crazy.
Well, and
Now
if
you
you want,
see a lease option, for example,
yeah.
you don't have to be 40 years old, you know?
Yeah. Well, and I think too, if you want a decent mortgage payment, and by decent, I mean something that should you have a life happens type event, you can still figure out how to hang on to your house. In a lot of cases, you could be putting 100,000 or more down on a property to get to that number where the mortgage every month is really affordable. And
Mhm.
that's also making it more difficult. There's a lot more barriers, I think, to becoming a first-time home buyer now than there was 15, 20 years ago. So
Yeah.
it's interesting. So I love that strategies like this exist. And I do believe when you say you can make money in any market cycle, I think you can if you have the right coach or mentor who understands the market cycles and has that strategy ready to go. Because if something shifts in the in the market, you might just shift your strategy slightly and then you're back up and running. So I love that. So Joe, where can somebody go? Let's say they want to talk to you, whether there's somebody looking for a house or somebody wanting to understand more about how you do the type of real estate you're doing. Where can they go to catch up with you and to learn more?
Well, the easiest place to go and to learn more would be my website, which is realestatementoringusa.com. One more time, it's pretty easy. Realestatementoringusa.com. And on there, I do explain some of the program. I explain all the programs that I have and the pricings there. And by the way, I will tell you all, and you'll see it when you get there. My prices are kind of unique. All right, it's not very expensive to work with me, and I did that for a reason. I sort of made mine, okay, over the years, and I really wanted to give back, and I enjoy what I do, so that's another part of it. And so, if you go to the site realestatementoringusa.com, take a look at the fees because you're going to think there's something wrong with the number. Okay, trust me. But I did it for a reason because there's a lot of people out there that would like to get into this business. And some of the pricing, and I'm not getting on them about their pricing. They're entitled to charge whatever they want for their talents. But some of the pricing is just ridiculous. Okay. Particularly in this day and age where everybody's suffering, and I wanted to give people a chance if they wanted to find out whether it's because what happens is people pay all this money, get into the business, and find they don't like it. It's normal, okay? I mean, they're trying, they want to try it and see if they like it. And they've paid all this money up front and don't want to do it anymore. Didn't even get their money back from a deal. I didn't want to do that. So the way I priced it is you can come in and find out whether this is something for you. Because, just why they made chocolate and vanilla. You don't know what you like until you try it. So you get into something and you don't like it, you haven't had to pay 8 mortgage payments in order to find that out.
Right.
So that's the best way to find out what I do, who I am, and what the pricing is, and all that kind of good stuff. Is at realestatementoringusa.com. That's the best way to do it.
All right. Well, Joe, thanks so much for joining us on the show today. And if you are out there listening and you are either looking for a house or you would like to really understand how you can take advantage of getting into real estate with almost no money, reach out to Joe, realestatementoringusa.com. Get out there, take a look, see what it's all about. I think it's going to be a great move for you. All right. Thanks, everybody, for joining us. We'll see you next time.